Welcome to the Vine Resources Podcast Show with your host, David Lawrence.
Welcome to another edition of the Vine Resources Podcast Show. Well, today I'm delighted to have with us a fabulous guest. We've got Freddie Kelly. He's the CEO of Credit Kudos. Freddie, thanks for joining me.
Thank you very much for having me.
Freddie, you've got a great business, really interesting, and obviously very interested in the fintech space, financial services industry particularly. Why don't you share with our listeners straight away? Tell us a little bit about the business and what you've been up to.
So Credit Kudos is a credit reference agency, a challenger credit reference agency. We started in 2015, so we're just coming up for 5 years old. We are using new data to measure the creditworthiness and affordability of customers. So unlike traditional credit scoring measures, we're able to get a much more accurate, up-to-date picture of an individual's finances and therefore their risk. And we're providing that service to just over 75 lenders in the UK and Ireland right now. That's
amazing. And I know you've got nearly circa 40 people. You've been for a Series A raise recently. What was that experience like during lockdown?
Yeah, it was interesting. I mean, not meeting people has a kind of weird closeness to it in a way, and I'm sure this is reflected in other industries as well, but certainly in terms of like sales and commercial conversations, and certainly hiring, we're having to do a lot of stuff remotely, so it's been interesting. But yeah, we were fortunate that we have really good investors that kind of doubled down on their commitment to us during what was kind of quite a sort of uncertain period right at the beginning of the lockdown, and yeah, we built relationships kind of very often with these things. They get announced kind of months after they started. So we were sort of in talks over Christmas and New Year. So we'd built pretty strong relationships, and it was just a case of closing the deal. But yeah, very pleased to have got that transaction through, and we're in a great spot. The need for digitization and some of these fintech propositions that have sort of been on your show is just growing because of the lack of face-to-face contact and the barrier that presents for incumbents and kind of more old school industries. So yeah, it's an exciting time, and it's a real opportunity for challengers such as ourselves.
Yeah, absolutely. And talking about those incumbents and players, I'm curious to talk about how did the idea manifest itself? How did it come about? What was those first few months like, and how did you put this all together, given that there's some sizable businesses in this market with a lot of money behind them as well?
Yeah, it's an interesting story. I mean, I worked in software engineering at the start of my career, and I studied computer science in the UK, and then I moved to the West Coast of America. So I went to work for a tech startup over there. I then did that sort of for a couple of years. I worked eventually in a fintech business that had been looking at new applications for bank transaction data. So we'd essentially got hold of a load of this data through another proposition, and we were modeling consumer behaviors. So actually trying to understand where people were going to spend their money next and try and sell that information to big retailers. But it was through that experience that I got kind of quite close to the applications of bank transaction data, and you're bearing in mind, although the US doesn't have open banking or PSD2, so the standards that govern the APIs, it's actually got quite a lot of people using bank transaction data because of the kind of legacy systems that are in place. So even just things like payments, like with Venmo and savings and things like Mint.com, that data was kind of already aggregated and people were using it. So got a lot of experience with that information. And then when I came back to London, I was hunting around for somewhere to live, and had to go through this tenancy referencing process that a lot of people will probably be familiar with, where I had to prove that I was going to pay the rent, obviously, and in my case didn't have a credit history, so I'd not borrowed money in the UK other than my student loan, which doesn't count towards my credit file, and so I more or less didn't exist as far as credit scores were concerned, and I had to actually print out and about 6 months worth of bank statements from my US bank account. So I had to go and like figure out how to get that from the US, bring it over, and give it to my landlord. And they went through it and sort of decided that I was a safe bet or not. And it was through that kind of ugly experience that the thought came to just automate all of that using banking data, and then kind of building on that, looking at how credit referencing works, which is quite a kind of long-standing model, but hasn't really changed very much in the last sort of 50 years. Saw a massive opportunity to use this data and use newer techniques, so things like machine learning, to build more predictive models that would allow people to lend money more accurately and most importantly to a wider set of people. So a lot of customers at the moment will be overlooked or perhaps overcharged for credit because they don't have what's known as a thick credit file. That they have like a non-complete credit history. And so using open banking data, bank transaction data, we can essentially build this new way to judge risk and allow people to lend to those consumers without risking more money or without increasing default rates, which is super exciting.
Yeah, that's great. And I was going to say, who throughout that chain has been losing out in that process, and who's now winning, and what's the benefit to both the consumer and the partners in between?
So it's a bit of everyone. I mean, our customers, as in the people that pay us, are the lenders. So consumers never pay for our service. We integrate at the point of application for, say, a loan application. So when someone's going through the process, they'll see our process, they'll share data through our secure system, and then we'll use that to build a credit report, which we then sell to the company that's lending the money. And so to some extent, the lenders themselves are losing out. They have a lot of regulatory obligations to fulfill. So some of the stuff where I described before, where they're sort of processing paperwork manually, they don't do that because they think it's a good use of time. It's because they have to meet certain regulatory obligations, and if there was a quicker, more efficient, more accurate way to do that, then they obviously would do that, and that's one of the things that we're enabling through our customers. But then for consumers, there are all sorts of examples where people have thin credit files. One that sort of sticks out recently was so we're lucky enough to be involved with the government's Affordable Credit Challenge, which was like a sort of challenge prize for fintech businesses working with credit unions and community finance providers. And through that project, which we were lucky enough to win in the end, we worked with the Serve and Protect Credit Union, which has brands across a variety of different sectors, most notably the prison service, police and military. And we built out a product with them that allowed them to lend more to those types of customers. And it was really interesting because, for example, people who serve in the military often lack access to credit because the way a credit file is retrieved is based on your name and address, essentially, and your date of birth. And if you've been living on barracks or serving overseas, often that's not up to date or doesn't have a name and address that you can give to link to a credit file. And so for those customers, we were able to use this approach that we've developed to lend to these people, and their alternatives were high cost or sort of doorstep lenders or things like that. So we could give them a much lower cost of credit whilst giving the lender the efficiency and security to be able to lend to those people safely.
That's amazing. What was those first 6 to 12 months like, particularly when you were building out the technology? What was the challenges you had to overcome? Because it was still, obviously, that was the early part, 2015, of an idea. You had to bring that whole bit to life and then create a product and service. How did that look like? What did that look like?
Yeah, I guess the short answer is it always takes a lot longer than people realize, and so often you don't hear about companies until they sort of raise their Series A, and the kind of 3 or 4 years prior to that is sort of overlooked, and that's the kind of the real hard slog often, because no matter how good your product and your idea and your team, and sometimes that you're just battling inertia, particularly in financial services. So for us, that sort of first period looked like getting some early customers, getting some early traction, and getting regulated. We pretty early on hit upon the fact that to gain trust and ability to operate, a seat at the table almost, we had to get regulated as a credit reference agency, which, as you alluded to before, there's basically only 3 companies that have done that anyone knows about. And so it's not like going for a sort of payments license or a consumer credit license, which is often what you saw sort of people doing in the news at that time. Fintech was a lot around payments at that point. So we had to really convince the regulator that they should regulate this new credit reference agency, which, by the way, at the time was less than 5 people in the business. And from a comparison, the nearest competitors were 10,000 people. So it was pretty crazy and pretty exciting to do that, and we managed to do it, which was a great achievement in itself. And then from there, we like I said, we worked with our early customers to prove the model, to sort of get initial traction, and then through initial investment, and then further on up the road, we got more investment to kind of grow that out, grow a team, and like you say, now that there's sort of 40 of us working towards this mission, and I should say we're still very much at the beginning of it, and it's still a long journey ahead.
I love the story about the license, because that's almost as big as a win as obviously your customers, maybe bigger. And I'd love to, I mean, obviously yourself and whoever was involved within your team to make that happen. What was the key learnings you got from that experience of making that happen? What would you have done different, or what was the things that worked really well? Because people probably don't understand how that, at the mountain of work, relationship building and things you had to overcome to make that happen.
I mean, there's all sorts of, there's this sort of whole like, and I think it's something we learned and did really well, was this sort of whole like procurement compliance cycle that fintechs go through, and to work with a big bank, especially at that time, and obviously innovation and collaboration is kind of improving all the time. But at that point, for a small company to just get a contract with a bank, it was very rare and difficult. And it wasn't because they didn't like working with small companies. It was because they were scared about, the stability and the trustworthiness and the all the different things that kind of need to be proven. And so we kind of went the whole hog very early on and did our authorizations. We did our regulatory compliance frameworks. We did our penetration testing, did due diligence, ISO, all that sort of stuff, even to the point where we are having people fly over from the States and like tell us whether our CCTV cameras were pointing in the right direction, all that sort of stuff. Like to get the boxes ticked, was so important, and it was kind of like a gating criteria that we just realized we had to get through. And so that was something we did very early on that paved the way for sort of the future growth, and was a really important asset. And it's quite interesting because I've read recently some very established fintechs only doing that kind of in their sort of 7th, 8th, 9th year of operation. And for us, it's been a huge door opener, because now we work with tier 1 banks and we work with global institutions, and one of the reasons they choose, it's not the only reason obviously, but is because we've kind of done it before. And so I guess the lesson for me was that you can have the best product or the best team or the best process or whatever, but that still doesn't mean you win. And you have to really work on how you collaborate with organizations that are very different from yourself, and that was a big part of how we achieved that.
Yeah, that's fantastic, really good. What is now bringing us up to date? Tell us a bit about your typical day in the business looks like for you. What are you getting up to?
I was thinking, I was sort of chuckling when I read this, because I don't know what typical necessarily looks like sort of in a post-COVID world, but I think we've adapted pretty well to being remote, and we're trying to kind of foster more engagement across the team, especially with hiring people that haven't even met their colleagues or directors of the business yet. That it's been kind of a really important, easily overlooked thing. A lot of people have said, oh yeah, like we're really good at remote, but what they've actually done is they've been really good at taking a non-remote team remote for a fixed period of time. It's not the same as like having new people join a fully remote team or being completely dispersed across the globe. So learning from that and building documentation, onboarding, making sure that context is easy to get access to and all the information's there has been a really useful exercise. We've been doing a lot of things to keep people engaged, so like weekly pub quizzes and crossword clubs and lunches and stuff like that, and it sounds kind of silly, but it's so important. For me right now, like I think like a lot of people, I'm spending a lot of time on Zoom. I sort of have a pretty standard routine of doing like internal management meetings and departmental meetings on the beginning of my week, and then clearing time for the rest of the week to kind of sort of do strategy stuff and commercial things, and then check in again with the rest of the team on Fridays. So yeah, that's proceeded as kind of before. I think you could probably write a book about the psychology of sales in lockdown. I think it's been super interesting to see how what maybe people thought would be a real blocker is actually in some ways been an accelerant. The kind of level of connection between salespeople and their customers and the speed at which they're able to operate. I think it's really interesting, and the sort of the personal bond that's formed when you're kind of in this shared experience has actually been possibly much greater than that you'd see in a kind of traditional, let's have, a beauty parade of vendors come through our office and talk to them about their relative merits. This is much more like, this is what we're dealing with. This is how we've solved these problems for you. I think that's been a strength of our business historically. So it's worked quite well for us.
Yeah, that's brilliant. That's brilliant. And just moving around that work from home environment, how have you seen things working well? What's been the challenges, and perhaps have you thought more around the strategy long term as a company that that you've obviously you're able to communicate at the moment?
Yeah, I think what's worked well has been quality written communication. I think that I was trying to make this point to someone the other day, and I kind of butchered it, but the sort of synchronous like Slack messages and short emails and Zoom calls can feel useful, and you can get into like a meeting paralysis where you feel like we should talk about everything because we're not in the same place. And what we've seen work better is people writing their thoughts down, right? It's kind of obvious, but like, jobs to be done or product briefs or commercial briefs or, thesis on this, like documenting what you're thinking and then sharing it and then having a constructed conversation. And then also having that documentation as a kind of future-proofed asset that the other people in the business can access. And that's really key to this remote working process. I do think that we're in an odd situation at the moment where, because everyone is remote, we can do things that kind of quote unquote conventional remote working historically hasn't benefited from. So, at the moment, like there's no us and them between people in the office and people working remotely, where there's information being kind of spread through osmosis in the office that other people aren't privy to. And so, it doesn't necessarily follow that if we go back to some level of office engagement, we're going to just have all the same benefits that we do right now. So I think planning ahead for that has been important. And we're still, I don't have an answer, and I'm sure you probably don't either, but like, when we're going to go back and what that's going to look like, we've kind of started experimenting with kind of optional office attendance in sort of like a pod structure. But frankly, everyone's working really well remotely. At the moment, sales isn't affected. So, we're not in kind of like a time crunch to sort of change anything. But yeah, the sort of future working is probably another book, isn't it? So
yeah,
we'll see.
A massive topic of debate, that, and it's great to hear how you've been working. What have you done to sort of, particularly when it was the start of lockdown, but what have you done to keep motivation within the team and perhaps to stop those who may have felt isolated, if they did indeed? Some may not. But what has been successful for you as a team, as a business?
Well, I think sort of some of the stuff I mentioned before, like keeping everyone talking, having, like the pub quiz thing has been great, even though it sounds a little.
Is that every Friday? Is it?
Yeah, at the moment, yeah, we're sort of rotating Quizmaster and just having everyone join in if they want to. I'd say the other thing is like is context. We have a weekly all hands call, and we talk about what's going on in the business, sort of soup to nuts, and that includes the gory details or the things that aren't great or are great, and why they're important, and what our customers think, what our other stakeholders think, what the market environment looks like, what our competitors look like, and we try and kind of like share everything. And I'm saying this like I'm sort of a kind of wise head about this. It's something we've learned more recently, how we get better at this, but enabling people to feel included and to make decisions on the topics that they're involved with, and then seeing how that has impact on the rest of the business, I think is really important. And that's particularly hard when you have like obvious divisions or potential divisions between, say, product and engineering and commercial, or non-technical and technical, if you like, and how you make sure that there's kind of ideas and thoughts kind of pollinating between the two of those. And so I think that's one way we're trying to solve that, is like give the sort of full context end to end. Like, let's show, for example, today we just had a call where we showed everyone how we pitch to customers, so that the technical people could see how the product that they've built is pitched to customers, and make sure that they've got the updated view of that. And that kind of sounds really obvious, but it gives them, the decision making capability to understand what's important to our customers, and then vice versa. Engineering talking about how they build things and what matters, and so on and so forth. So it's a bit of a waffly answer, but I think talking in the right forums and having people able to understand what's going on and why it's important, I think is a big part of this. But we definitely don't have a full solution. It's been a really difficult, for so many reasons, it's an awful time, and so many people kind of having to deal with all sorts of stuff going on, and being at home is it's a bit of a weird one, because at the first it sort of felt quite novel and entertaining, and then quickly it had impacts on people that perhaps they weren't immediately aware of, but were serious and meaningful. So just keeping in check with everyone, I think.
I think your last point there about the about actually what the customer wants, and having your engineering team close to it, that's really important. You see larger scale organizations that perhaps don't have that closeness, that are able to do that like you can in a more agile business. What I'm curious to know what's driving you. What's your work ethic and your work drive? Is there perhaps a story from your earlier years or childhood that influenced this work ethic that you've taken on yourself?
Probably a bunch of things. Like I grew up in sort of, I guess, quite a technical family. Like my parents both worked in communications and computing, back when they had those like big tapes spinning around and all that stuff that you saw in Dr. Evil's lab or whatever. But I was sort of surrounded by computers and technology, and that, I guess, made me interested naturally in computing. I think in terms of like my work ethic, I guess, sort of being quite resilient and continually pushing at something. Both my mum and my dad, I spent a lot of time for example, like just sitting in my dad's office. I was a bit of a child geek, and just sort of like watching him work or seeing what was going on, and I'd sort of learned that resilience and that repetition. And I think ironically, they were also trying to close like big caliber deals with big corporate entities, and probably realized that doesn't happen overnight. And certainly, when you hear people talk on podcasts and things like that, they never really talk about like the amount of times you have to take no before you get a yes. And just having some experience of that, just to keep on going. And this kind of goes back to that earlier point about these companies seeming like overnight successes, but they're often 5 years in the making, and that they had to take a lot of that rejection or harder stuff to get to the point that they're at. And so again, you go back to the same point. You can have everything, you can have the product, you can have the team, and you can still feel like you need to give up. And so I guess just not giving up and repeatedly kind of sort of trying and adjusting and trying is something that I learned from my folks, which has helped me in what we're doing.
We're now midway, almost crazily through the year 2020. What's exciting you for the industry, and what do you think the next 12 to 18 months looks like, if you can crystallize that a little bit?
The change is dramatic, and we're only at the beginning of it, right? The knock-on effects of, for example, the like remedies or the stimulus, we haven't seen that yet. So although it feels like, depending on where you are in the country at the moment, it sort of feels like there's some level of normality returning. But we're really like not through the woods in so many ways, and all of this like unprecedented I used the word unprecedented economic change. Whilst it's, in many ways it's terrible, and the reason it's happened is terrible, it also is an opportunity for change and for businesses to adapt and do new exciting things. And I think, to that point I just made about people banging on the door and finding it quite hard to kind of get adoption. There's, with a lot of these kind of digitization processes, there's now much more willingness to change because there's no other choice, right? You think about the example I made earlier of people like using paperwork to approve a loan application. If we suddenly were doing only that for all our customers, we basically wouldn't be able to have a business. So it stands to reason that I need to do it digitally, and you've got the FCA saying the same thing. They're saying, okay, well, because of this disruption, we will let you have e-signatures for credit agreements, we'll let you have selfie identification for KYC processes. And so all these companies that have sort of been pushing that change for a while have suddenly got it in buckets, which is really interesting. And it's creating opportunities to build more interesting products on top of that. We've for example, we've been looking at the credit side, right, and impacts of things like the furlough job scheme. There's now over 9.5 million people that have been on that process at some stage. I think 2.5-3 million people on payment holidays for their mortgages. And so what does that do for traditional credit risk modeling that's based on the 5 years prior of totally unrelated behavior, right? It's a massive change. And okay, well, how do I adapt to that? Well, using more up-to-date live feeds from bank accounts might be one such way I could get a real-time view of a customer and help them get the right credit product and get the right solution. And so for us, that's a massive opportunity to build tech to do that. So there's all sorts I'm excited about. I mean, I'm a bit of a geek on this stuff, so I get excited about just the sort of minor changes in regulation and whatnot. But I think fundamentally, like, fintech has always been around digitizing, and we've just sort of accelerated that massively. So I think that's a good thing from what is otherwise a really terrible story.
What kind of people are you keen and interested to connect with, building relationships with? Who would you be looking to do that with in the near future?
I mean, all sorts. I think there's so on the sort of narrow lens of lending, there's so much like change in like business models there. Mm-hmm. Like different product types coming on the market. We've seen things like income smoothing, salary advance, like subscription-based lending models, automated decisioning stuff. So helping people in the example I gave earlier with the police force and military, helping them use something else that they have to get access to credit. So I think that's really interesting. And obviously, if you look at like post 2008 financial crisis, obviously very different circumstances, but alternative lending as a genre, as a sector, really exploded in that kind of subsequent year and a half, because there's still a need in the market, and there's all these innovative companies wanting to fill it, and they grow really quickly. So yeah, I'm interested to speak to all those types of businesses. I didn't mention, but sort of like buy now, pay later as well is like another, or point of sale credit is another really interesting way to kind of facilitate credit at the point of sale. So again, rather than we've got a lot of people using credit cards, rather than sort of financing on a revolving debt line, you can kind of finance a specific purchase, which obviously has without getting too much into the weeds, has an interesting impact for the risk profile of those customers, because you actually know what they're buying, and it kind of gives you some more security. Mm-hmm. So I think there's so much going on, and we've got clients in all these spaces, and we're working really hard to build the tools that they need. So yeah, that's kind of the stuff I'm sort of most excited about, and obviously how you bridge those things into the products that we're using day to day. So rather than I go to my bank for finance stuff, this model of like horizontal finance, where it's like I'm in my favorite online catalog and I access finance through that, or I'm in a payments tool or whatever, and I'm speaking to my friend through chat and I can send them a payment, or I can get a loan, or all that kind of blending of horizontal models. I think is super interesting. Sorry, that was a really really windy, windy answer, but
no, it's great. There's so much in there, and I'm sure the future is certainly bright in that respect. What just as a final one, Freddie, and thanks for giving us so much detail about your insights. What if you're giving your 20-year-old self one piece of advice now, just looking back, what would you say to yourself?
I guess the resilience point I made earlier was probably the main one, but I think probably I mean, a 20-year-old version of myself probably wouldn't have listened to anything anyway, so yeah, it may be a moot point, but the one that comes to mind is the sort of imposter syndrome thought process and trying to eradicate that. I spent, as I said, quite a bit of time in the US, in Silicon Valley, where everyone sort of thinks that like there's some magical chemical in the water or something that makes people build companies. And admittedly, there's a lot of cash there, but I think the main observation that I had from my time there was that people were just a lot more confident about themselves, a lot more accepting of failure, and a lot more willing to say, we'll try this, and particularly investors, pitching to an investor and saying, I failed on this, it was almost a positive. It was like, well, I learned all of this stuff that I'm not going to do again. Whereas in the UK, we've got this kind of like taboo around failure, and because we're not accepting of failure, we can't build. It's harder to kind of make the lump and make the jump, and build companies. So I guess just care a little bit less about failure and just kind of focus on trying to do something interesting.
Freddie, thanks for sharing that on a very hot day as well. Freddie, if people want to connect with you, reach out to you, find out more about the company, what's the best way they can do that?
So we're creditkudos.com. I'm on Twitter and LinkedIn, so Freddie Kelly or Fred Kelly on Twitter. But yeah, happy to chat if anyone wants to reach out.
Freddie, thanks for joining me so much.
Thank you.
We really hope you enjoyed the podcast today. If you want to listen to more exclusive tips and life lessons from our guest, go to the resources page at vineresources.com.